Hello traders and welcome to another video review. Today is Wednesday, March 23rd, 2022. We are going to start as usual with the Forex calendar. During the London session, we have plenty of data scheduled for release, like a consumer price index, which will be apparently one of the key events of today. The market participants expect an increase from minus 0.1% to 0.6%. Of course, we got all of this sub indices as well, like index core, retail price index, and PPI input and output. Together with this data, at 8 o'clock, there is something more scheduled for release, which is annual budget. Annual budget from the UK is scheduled for release 1:30. During the New York session, we have Federal Reserve Chairman Jerome Powell's speech scheduled for release at 1 p.m. and then the other data from the US, like new home sales and then crude oil inventories for all of you crude oil traders. At the end of the day, we got the FOMC member James Bullard speech scheduled for release at 8 p.m. So pretty much kind of an interesting day today, especially for all of you who are trading British pound. So let's start with cable on a daily time frame chart. The cable is trading inside of this large and long-lasting channel. The recent low was made at the level of 1.3, and since then market has bounced to the middle of the channel. Currently we are heading towards the next technical resistance, which is important from the daily point of view. This technical resistance is located at 1.3359. Let's just zoom in towards the newest data. What do we have here? Bounce occurred from the extremely oversold market conditions. Right now the momentum, as you can see, is breaking above the level of 50 on the RSI, which means the market is jumping from the negative to the positive sentiment. And as well we got the level of 38% tested. This level is located at 1.3168, and this is the 51% of the whole move down, of course. 50, the middle line, the 50% line inside of the channel, broken already. Very nice candle yesterday, very big green candle, up candle was made. So we expect a continuation of this move to the upside. If we put some Fibonacci retracement level of the last wave down, which started at 1.3644, we can see that about 38% of this recent rally had been already retraced. So 38 is now gone. 1.3247. We are approaching 50%, 1.3323, and 61%, 1.3390. Of course, those levels are just one is above, second is below the key short-term technical resistance at 1.3359. So please be aware of the fact that there might be increased bearish activity between these levels. If 61% is violated, then the next technical resistance is seen at 1.3488 level. British pound to Japanese yen, what is going on there? We have a huge extension to the upside, as you can see here. Right now, after the false breakout to the downside, we are testing the upper channel line, and during the last 2 weeks, the pound versus the Japanese yen has been rallying very, very significantly, and right now the market is testing the extremely overbought conditions. 72 points on a daily RSI indicator is something to pay attention to. Yesterday, big big candle, lows at 1.5722, highs at 160.26, which means this is a high or wide spread candle daily, of course daily candle, which means bulls are in total control of this market. The next target is seen a little bit higher. However, if we zoom out, as you can see, I'm trying to find some levels here, and the next eventually target from here is at 163, let's say 164 level. So this is apparently the current 164, 163.74. Of course, some occasional pullbacks might happen along the way up. However, this wave progression here is clearly impulsive in nature, so we should expect higher prices to be achieved quite soon. As you can see here, we got this target at 163.74 pips. So let's see if first market want to test the breakout at 159.19 and then rise higher, or we will still continue to move towards the technical resistance, because the market conditions are extremely overbought. The next move of the market participants might look like this. Okay, so test first and then rally. However, if bullish pressure will still be very strong, we can expect even a continuation without this slight pullback towards the last technical support. So that's the British pound to Japanese yen. Two major pairs had been of course analyzed. We got this scenario. Let's take a look at some other pairs like US dollar to the Japanese yen. The US dollar to the Japanese yen is rallying, as well as British pound to Japanese yen. A recent level hit today was 121.42. This is the local high. So I think we should just change this color to green. 116.39 is now the technical support. Market is way extended to the upside. 82 points is extremely extreme level. Those market conditions are very extreme. However, if we again zoom out, we can easily see that this move to the upside is clearly impulsive. We pass the highs of 2017 and are heading higher. Where is the target? Well, the next target for bulls is seen at the level of 126, I guess. Yes, somewhere around 126. This level might be hit very soon, because this is a key technical resistance from 2015. So please pay attention to this level. Any violation of this level is very bullish for this market. It's clear that the bulls are in control of US dollar to Japanese yen. However, again, please be aware of the fact that this kind of a market conditions, extremely extreme market conditions, might not last for long, and we might see some sort of the pullback or even a correction sooner or later. Last 14 candles, only one is red. All of them are green. So right now only the upside is interesting for bulls. Because of the crude oil inventories, let's take a look at oil. So the oil had completed the wave 5. It looks like we are now in the corrective decline towards the level of 108. A recent rejection of 115 with this pin bar here, the red daily candle, means that we can continue the down move initiated from the highs of this year in the level of $130.44 per barrel. So as long as we trade below 61% of the retracement of the whole move up, this level is located at 116.37. The outlook remains rather bearish. I mean, we need to continue the move to the downside, but in order to continue this move to the downside, the momentum must drop below the level of 50 once again. So the market might continue this move towards 95, 89 or below. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.